morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, September 13th. Okay, so was that a one-hit wonder on Friday? Market sold off really hard, actually almost, I would say, a mini crash, and then just to take it pretty much all back on Monday. Well, this is what algorithm trading is all about, guys. Unfortunately, we're dealing with a bunch of computers and robots, and that's what happens. So fortunes are lost. People sell their portfolio and then only to make it right back the next day. And it's just terrible the way whoever's in charge don't regulate the algorithms that are trading during the course of the trading day. You know, for day traders, it's totally different. For people that have their 401ks and really rely on the markets, it's just absolutely terrible. Just getting tossed around back and forth because of these algorithms. But that's what we dealt with. So unfortunately, that's what we have to deal with moving forward. All right. Well, we had a lot of Fed governors speak yesterday, and that's the reason for the move higher. And also, for that matter, they should put some sort of a lip on their comments because of the fact that they should not be speaking on what they think should be happening and moving markets and gyrating markets all over the place. So it's also not a very professional thing to do for these Fed governors that speak all day yesterday. So we had a lot of dovish comments, and that's why the markets rallied, and only the reason why the markets rallied. And we rallied into a resistance. I'll show that to you on the charts going forward. However, whatever it is, you can't realize, can't say, or fail to realize that rates are rising. And what happens is that I believe the bottom and the generational low in the rates have been met. Even if we tested the lows in rates, I do believe that we have seen the lows going forward. I do believe that markets will move higher. I've showed you many times on the charts the 10-year. In front of you is the 10-year, and you can see my projected target on the ascending triangle. So when that happens, you're going to see bonds really start to kick into the downside, as they have been already. But this is really my target here, 186 for the moment. Then, of course, we'd reevaluate it. And if that happened, here's the 200-day moving average, guys. If that rates get back above here and it kind of holds right above this 200-day moving average, you're going to get a second leg higher here and possibly even challenge these highs. And it's not going to happen overnight. There's no question about it. But when that happens, you're going to see a lot of these policymakers and Fed governors start to really get nervous because they're nervous already because what's happening now, their last leg of QE, they're kind of limited of what they can do now, and pretty much they're going to have to rely on what the market does. They just can't manipulate the market as much anymore. And it's going to be a sad thing for a lot of the traders and investors that actually position themselves for this type of trade. Now, when the unwinding process happens, it's going to get ugly because it's all one-sided. As we all know, we've been buying the markets, not meaning we, but the market participants have been buying the market since 2009 and still looking for free money. And when that does not happen, you're going to see an exit to the doors because everything, all of what we say the long trade is one-sided. So take a look at the bonds. You can see the TLT, and we did have a decent day yesterday. We pushed up a little bit, but really didn't go anywhere. We're still within an inside day here. Really need to fill this gap. And what I'd be looking for, that 38% retracement really almost hit it to the science here. But 134 really is going to be that spot for that first target. And then, of course, that 200-day moving average. A lot of volume to the downside. We did get a little bit of volume yesterday to the upside. And that goes to say really pretty much across the board. So look for a back test or some sort of a lower high from this breakdown here. If we can get somewhere down around maybe, I'd say somewhere around 137 even, and then start to fail, that could be a decent short moving forward. So that's what I'm going to be looking for in bonds the next couple of days. Here's gold. Just want to show you what gold did. Really didn't do too much of anything yesterday. Still outside, though. We did close lower. Gold did put in a red day yesterday, as well as the GDX. So still looking for a downside target of around 120 and a half. That might take some time, but we need to take this pivotal low out of 124.78. Okay. Next is going to be the GDX, and you can see here GDX had a much better day, as it always usually does, because it's a little bit more volatile than the gold itself. But we're seeing here that we took back at least two-thirds of the candle on that day lower on Friday, but you could still see that we're very, very weak, and our momentum indicator is still pointing for lower prices yet again. If we take out this low from 9-1, that 25.25, I would say look for a flush all the way back down to this area here that's somewhere around 22 bucks. All right, and then the spiders, take a look at the indexes. You could see here clearly we took back two-thirds of that candle, but remember we closed way back up here. So still have some damage control to take care of for today, and we'll see. We'll see if the markets start to move. We are lower again this morning, and we'll see if we get bid up. Remember, this market move was only because of several Fed governors started speaking hawkish. Excuse me, I apologize, dovish. So if that happens, and markets really realizes that pretty much the Fed's pretty much done with can't really control this market too much to the upside, you're going to see a reversal. But remember, it is an election year, so I do think that reversals and pullbacks will be limited. I do believe that 210 is going to be the target. This is what I'm looking for, and then of course we would reevaluate it. But 210 is definitely the target here in the next several weeks. Okay, next is going to be the transports, and you can see transports again, same thing. Took back at least 50% of that. It is our leader, so it is back above that horizontal trend line. But you could still see damage is still done here on these indicators. So we still need to work back up and take back pretty much 100% of all of the candle that happened on Friday. Here's the IWM, took back 50% of that candle, and that's normal, guys. That is normal. 38 to 50% of that big, large engulfing candle, whether it be down or up, that is pretty normal to look for. Now, today is really the important day. And I want to show you, matter of fact, let me just bring in a 30-minute chart here. I just want to show you what really transpired. You had a down move all day pretty much on Friday, and we had an up move all day pretty much on Monday. So very difficult to get long, very difficult to get short here, and with very little pullbacks in order to reset itself to get long, so you can identify your stops properly. When you have just straight up, and you get long, let's say you get short in here, if you wanted to get short, and where you put your stops, there's nowhere to put your stops, so you have to basically say to yourself, what you're willing to lose, and so be it. But when things happen real quickly like this, and there's no pullbacks, there's no basing, it's a little difficult to identify your risk, and sometimes it's best to just step aside. And yesterday, I was looking for a short yesterday to look to short the market, and it did not give it to me. Just kind of went straight up. So, but I just wanted to show you what the intensity of volatility is: up, down, straight, right back up again in a V formation, only to just back test resistance. So something that we're going to be looking for today is going to be very, very important. Okay. And lastly is going to be the Qs. You can see here the Qs took back all of its reversal candle. Again, still have this gap area that may need to be filled. Not sure, but we are testing this area of support, which was resistance, is resistance now. So let's see what happens today, guys. Today is Tuesday. Could be a possible turnaround Tuesday that we revert back to the downside. All right. Pay attention to the news. Unfortunately, this is going to be a news-driven market. We have very light economic calendar for today. Have a great day, everybody. We'll see you tomorrow.